Welcome to Global Investment Insights, a weekly podcast brought to you by ADCB Asset Management. My name is Kishore Muktinutalapati, an equity strategist for ADCB. With an objective to empower you with investment insights, on this program we discuss various perspectives shaping the global investment landscape. Traditional portfolios had bonds as a key component. Bond instruments were used by investors as a tool to diversify risks, generate income, preserve capital, and as a hedge against economic slowdowns. However, the role of bonds in multi-asset portfolios has come under scrutiny amidst the rising inflation pressures and tight monetary policy bias. While there are reasons why investors need to be underweight bonds tactically, which, by the way, is our position at the time of recording this podcast, we think investors need to maintain some exposure to bonds in multi-asset portfolios. Bonds may share a positive correlation to equities during periods of stagflation, yet we think the lower beta of bonds still helps these instruments cushion the downside for equity bond portfolios. In addition, fixed income includes a broad range of assets, and we believe they can be used more effectively in bringing diversification to portfolios. Also, fixed income instruments can allow investors to play thematically, for example, green bonds for ESG considerations and sukuks to invest as per values and beliefs. We have recently published a short primer on sukuk, an instrument which is gaining popularity as a social and ethical way of investing in line with the rising ESG considerations in fixed income portfolios. To discuss this, we joined today by Prerana Seth, our fixed income strategist. Prerana, welcome back to this podcast, and let us start this conversation with a basic question. What are sukuks and how are they different from conventional bonds?
Thank you for having me here, Kishore. In Arabic, sukuk means certificate or paper. Guided by the Sharia law, which prohibits riba, that is interest, sukuk does not act as a claim of debt. In Sharia law, the basic principle is that money is not a tradable commodity, and hence it is not possible to earn profit from its utilization. Profit can only be earned through exchange of goods and services. Sukuk represents ownership rights to underlying assets which comply with Sharia law and the income generated from these assets. The issuer of a sukuk uses the proceeds received from selling the sukuk to investor and then invests them into underlying assets in which the investor holds a partial ownership. The sukuk or Islamic bonds are referred to as a form of debt instrument mainly due to their similarity in their risk-return characteristics with conventional debt instruments. However, there are underlying differences between the two. Conventional bonds represent a debt obligation, while sukuk is a certificate of ownership of an asset. The asset backed by the sukuk are in compliance with the Sharia law. Bond valuation of a conventional bond and pricing is derived based on the credit rating of the bond or the institution. The sukuk, whereas, is priced based on the valuation of the underlying assets. Fixed interest, that is riba, coupon, is the income that is generated from the conventional bond. Sukuk, on the other hand, receives its income from the increase in the value of the underlying assets. And finally, the sale of a conventional bond corresponds to the sale of debt, whereas the sale of sukuk corresponds to the sale of ownership of the underlying assets.
So, are sukuks very popular? Why don't you give us a sense of how big the sukuk market is and which countries are large markets for these instruments?
Sukuk instruments, in fact, have been gaining rising popularity amongst bond market investors and have managed to establish a strong presence in the financial markets since they were first launched about more than 20 years ago. Market capitalization of the sukuk market has increased 4 times over the past 10 years, with the current market cap at around $800 billion as of end of 2021. Domestic sukuk holds majority at 70%, while international sukuk constitutes only 30% of the total size of the global sukuk market. In terms of the country-wise key players, they stand with Malaysia, Saudi Arabia, Indonesia, and UAE. Launching the first sukuk ever in 2000, Malaysia has the world's largest sukuk market and continues to be the top issuing country, holding 40% share of the total global sukuk outstanding. The country in fact leads both the sovereign sukuk as well as the corporate sukuk, and also has the world's most active and liquid secondary market. The largest outstanding sukuk by currency is also in Malaysian ringgit. However, Malaysia's share has declined over the years with the rising competition coming from Saudi Arabia. Saudi Arabia's sukuk market has grown substantially, making it the world's second largest sukuk market and issuer.
Thanks for listening. We hope you found this podcast useful. If you did, please do share this with a friend or a colleague. For more information on what was discussed on this podcast, please reach out to your ADCB relationship manager. We will soon be back for part 2 of my conversation with Prerana Seth on sukuk market. You were listening to the Global Investment Insights podcast from ADCB, and my name is Kishore Muktinutalapati.